back talking about my absolute favorite setup, the US memory sector. OG followers will remember, back in February when I covered Sandex, I gave you the open playbook, right? When the market shows divergence, it's just a pullback to let you on board. So did you guys catch the meat of this memory rally? Well, the exact same setup is playing out again. Memory giant Micron just delivered a blow-up earnings report with a massive 75% profit margin, and the stock down for 2 days straight. A lot of retail traders are panicking, thinking the top is in. Honestly, I'm completely numb to it. This is just Wall Street's classic sell the news game. After all, Micron has a pretty heavy float. But pivot your attention to Sandex, and you understand. Last night, Sandex printed a fresh all-time high, reaping straight to $776. And Citi even upgraded their price target overnight to $875. The broader market is an absolute bloodbath. Yet this thing refuses to dump. It just won't drop. Why? There are two hardcore macro catalysts driving this. First, short-term liquidity gains. Take Sandex for example. Why is it holding the line so stubbornly? Because we are approaching OPEX. The tape is spinned by 5,000 contracts of dirt cheap $800 call options. As long as the bulls don't roll over, market makers are forced to hedge their risk by aggressively buying the underlying stock. This creates a massive wall of buying support, a classic gum squeeze. And once fresh capital retains in next week, Sandex is highly likely to trigger a violent wave 2 markup. Second, we are officially enter a true memory supercycle. The core driver is the exponential demand for inference driven by the token economy. Jason Huang said it himself, the future of AI isn't in training, it's in inference. Now that LLMs are in a deployment phase, daily token consumption has sixth in just month and skyrocketed to 180 trillion. Every single token consumed requires a real-time access to massive memory. It's an absolute bottomless pit of demand. And more importantly, Alibaba Cloud just announced a price hike of up to 34%. What does that tell you? It tells you the market is willing to pay a premium for high-performance storage. Downstream absorb the price hikes, and upstream profit margins blow wide open. The entire supply chain is in a bullish feedback loop. Looking at the EBC market buzz pool, even with the VIX standing elevated, bullish sentiment on Micron and Sandex is still off the charts. Especially Sandex, smaller float, way more explosive data. Translating this into a trade. The highest probability setup is the upstream memory chip makers. Micron, Sandex, Samsung, SK Hynix, they hold absolute pricing power. They're the ones eating the biggest chunk of the meat. And the ones feeling the squeeze are the downstream hardware vendors. Costs are spiking, margins are getting crushed. Their survival depends entirely on passing those costs to the consumer. And finally, let me throw some cold water on this and highlight two macro risks. Risk one, short-term volatility. If the options squeeze unwinds and players take profit, the stock could see a massive drawdown. If you are chasing the reap, manage your sizing. And risk two, the fatal flaw in a long-term thesis. If AI monetizing misses expectations and consumers refuse to pay up for premium hardware, this supercycle gets heavily discounted. And bottom line, the macro outlook is bright, but the road will be choppy. Smart money has already positioned for the long game. How are you guys planning to trade this AI memory fist? Let me know in the comments. Drop a like if you follow the logic. And as always, this is just my personal trading analysis, not financial advice. See you in the next one.